What's going on, guys? Welcome back to another video. In this video, I've got another AMC update to bring to all of you this afternoon. So what we're going to be covering in this video is the massive skyrocket in failure to delivers in the second half of June. We have just received this data. It is very abnormal, so we're going to go over exactly what a failure to deliver is, how these fails actually happen, and essentially how these synthetic shares are created that actually create some of these failure to delivers, and how they're not even reported in these short interest. So what a lot of this culminates around is that we need better short interest reporting. There's really not a good system in place at the current time for all of these shorts to be reported, put out into the open to really see how much short interest there is in a stock at the current time. And that is really one of the main things that we need in order to have a fairer market. Now, we're also going to be going over the reverse repo data because that is also a very important aspect of this AMC short squeeze situation, and it ties into our broader market. So before we get into all of that information, if you enjoy the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And the more people that we have staying up to date with accurate AMC information, the stronger our community becomes. So when we're looking at the chart of AMC, for today, at the current time that I'm recording, we are up about 1.7%, trading at around $34 a share. We did see a very substantial run up in this morning, but we did have the short sale restriction on, but we did get knocked down, came back up, and we have been on another one of these basically algorithmic downtrends. So let's get into this failure to deliver data. Exactly what a failure to deliver is: whenever a trade is made, both parties in the transaction are contractually obligated to transfer either cash or assets before the settlement date. Subsequently, if the transaction is not settled, one side of the transaction has failed to deliver. Failure to deliver is critical when discussing naked short selling. That is essentially the pinnacle of what we all believe is going on with AMC at the current time. Now, a quick Ortex update. Ortex has the new failure to deliver data, but something that you need to keep in mind is that if you just update or open up Ortex, you're going to see the actual weekly numbers of failure to delivers, and how they report them. They're just adding all of the numbers up, which is not exactly how these numbers are supposed to be represented. The failure to delivers are like a running net total of fails on that given day. So when you see this 19.7 million number and this number right here, 11.8 million, they're not exactly accurate. So when we look at the utilization, which is the amount of shares that institutions are willing to lend versus the amount of shares that have actually been loaned out, we are sitting at 92.5%. But when we look at over here, the shares on loan has actually gone up. The percentage of the free flow on loan has actually gone up, but the estimated short interest as a percentage of the free flow is staying at these lower levels. So it is very possible that a lot of these shares that have gone out on loan have not been shorted, but actually returned. Now, taking a look at what is exactly going on with these FTDs, for the second half of June, we can see right here, we had a pretty low amount of failure to delivers. Then we automatically spiked up to 2.3 million. Then the next day, another additional 2 million. And we are staying at that level until the end of June. Now, not every single failure to deliver is a naked short. It is possible that these fails can arise from not being able to locate shares when people are exercising their options, or from basically clerical errors or accounting errors that are happening. But every single naked short or a synthetic share results in a failure to deliver. So the fact that we are seeing such an incredibly high amount of failure to delivers is very, very strange. Now, a lot of these failure to delivers are a result of these deceptive options tactics in which they are creating these synthetic shares. Now, there is a difference between naked and synthetic shares. A naked short is when your broker does not meet the locate requirement to find the share that you have to short, and they let you short anyway. So it is essentially an uncovered position with the underlying security. A synthetic short is more like you're creating something that does not necessarily exist. So what they do in these options trades is they sell a call and buy a put at the same strike. But since the options or the stock is hard to borrow, there's a disparity in this equation called the put call parity, where you can actually enter into these trades for a lower cost than the trade is actually supposed to be trading for. So it creates an obligation that you cannot actually fulfill. So they enter into another trade to reset the FTDs. So we would expect to see a very high amount of volume on the option chain, or institutions that are doing this, a very high volume of options in their 13F filings. Now, when we come over to Fintel, look at all of these options right here. These are all the put contracts, but look at how many shares all of these are controlling. This is absolutely insane. Then we can see the calls right here, even more shares. But here's the issue. Since we need to know if they are shorting these call options, we actually can't determine that. When you look at the SEC's FAQ on whether or not you have to report short positions on your 13F filings, they don't have to report short positions on short sales of stock, and they also don't have to report written options, which means that you are selling the option. Now, let's confirm that really quickly by going over to the SEC's FAQ page on their website. What about short positions? You should not include short positions on Form 13F. What is going on there? Why don't they have to report short positions? You may report put or call options that you hold and that are included in the official list of Section 13F securities, but you should not report put or call options that you write. This means that your short options positions, like your short equity positions, will not be reported on Form 13F. This means that in the quarterly filings for all of these institutions, we can't see anything that they are shorting. This is extremely deceptive, and this needs to change in our markets in order to make it more fair. But the fact that there are so many failure to delivers, as we can see right here, occurring in AMC share price right now, in AMC stock right now, really is a determining factor that there is the potential, the high potential, that there is naked shorting going on in this stock. Now, we all understood and went through that issue with the threshold list. Last week, AMC is currently not on the threshold list, but that does not mean that the failure to delivers are not still occurring. They could easily get put back on the threshold list if they meet that 5-day requirement again. Now, when we come over to the reverse repos, this is something that I have not brought up in a couple of days, but it is still incredibly important. So a brief recap on what a reverse repo is. What is going on right now in our banking system, in the financial markets, is that there's too much cash circulating in the system. So that has now become a liability on the bank's balance sheet because they have to pay interest on all that cash that they now have. So what the banks then do is they give that cash to the Fed, and the Fed gives them treasuries instead. And the fact that we are seeing such a high amount of reverse repos is incredibly alarming. When you combine this with Wells Fargo canceling their portfolio lines of credit, you see JP Morgan basically issuing all of those margin calls, according to that unreported article, however. And we are also seeing Goldman Sachs come out and say, hey, we sold 25% of all of our equity positions over the last quarter. Everything is pointing to a significant downturn in our financial markets. Now, I don't want anybody to be confused by that statement. When we talk about market corrections or market crashes, one, we have to speak about the beta of AMC. So at the current time, the beta of AMC is kind of up for debate, but every single number that I've seen that lists the beta for AMC is negative. That means it is negatively correlated to the overall market. So if the market comes down, AMC should go up. And that does not even account for the margin calls and forced liquidations that could potentially occur in the near future if we see that market correction. And we all know how bad the margin debt is in our country right now. It is approaching $900 billion. And a lot of these institutions are trying to delever. That is exactly what we are seeing with Goldman Sachs. So a brief recap of what we discussed in this video is, one, the failure to delivers are spiking. They are still very relevant to our situation, and we just received new data. It suggests that there is a lot of naked shorting going on, but again, it is possible that some of those shares that have failed to deliver are the result of other causes. Now, some of the causes of failure to delivers are those deceptive options tactics tactics where they are selling calls and buying puts at the same time and creating those synthetic shares. And they use options again to actually kick the can down the road. So that is going to conclude this update for AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people as possible. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.